I think when we talk to clients, the big surprise is that rates have not gone down. It's been all over the news the past few months leading into the new year that the Fed lowered their rate twice, if not three times, if I recall.
Sure.
And everyone kind of assumes that a lower Fed funding rate will automatically equal lower interest rates. And unfortunately, it's just not the case. There's so much other data and so many other factors that go into what gets to the consumer market rates. And, it seems like the markets have kind of been hedging against what the Fed's doing a little bit, right? The economic data that's come out since they lowered their funding rate, like inflation, creeping back up or maybe just not dropping as much as expected. Unemployment numbers coming or jobs reports coming out stronger than expected. It all indicates a strong economy, which kind of pushes against what the Fed's action would be of lowering interest rates. Why lower rates if the economy is strong anyway? So we're in this kind of bubble here where the Fed rate is lower than it was, but interest rates have actually creeped up. And we'll see that balance out, I think. And, there's also been a lot of anticipation and concern a little bit with the incoming administration. What are they not going to do? A lot of the decisions that they make coming in could impact consumer rates just as much, if not more, than what the Fed actually does.
So, Sarah, are you seeing consumers hesitate on these rates a little bit, or what's been the overarching theme with the folks that you're helping right now that are when rates come up? Because it seems like sales have stalled out a little bit the beginning of the year so far. If you look at some of this data, according to Bright MLS, sales are down 11% compared to where they were a year ago through the week ending January 12th. So what are you seeing in the field with some of these rates kind of hanging in the low sevens?
Yeah, I'm seeing even from the listing side, when negotiating stuff out, and then there was a deal that just went under contract last night, but throughout the day there was a little bit of a discussion of with these higher, with this number and everything, we need to rerun numbers to make sure everybody's comfortable with everything. So I think just kind of being sure to double and triple check things. Given that they've kind of been in this same range for a little bit now, I think that the people who are out are kind of expecting it to be there. Obviously, everybody would like it to be less, but, it's not like they went from 6% to 7% in a day.
Yeah, and what's interesting, I think, Kyle, you hit on it, is that we've seen the jobs report is not what people were hoping for. And, we've seen that, if you look nationally, what's going on with home sales, we're seeing that, new contracts so far are coming in low this month, 10% less sales nationally than the same week a year ago. We're seeing a similar number here in the local market here. Now we have, one of the Fed governors, and I don't know how much you chart this, Kyle. I'm kind of curious because obviously this is your wheelhouse here. He came out and on a CNBC interview last week and said, and if inflation continues on this path through the beginning of 2025, it's reasonable to think that rate cuts could happen in the first half of the year. I don't know that anyone was predicting that a couple weeks ago, but now they're all over the place here.
It really is meeting to meeting, interview to interview, month to month. Leading into Q4 last year, there was high expectations of many rate cuts moving into 2025. When the Fed did cut the rate a couple times and the market rates didn't move and all the data didn't support that projection, everyone swung completely the other way. Oh, maybe they won't cut the rate at all. Maybe only one time towards the end of 2025. So I try not to, obviously I monitor it, but I try not to get too mixed up in these projections because it can change at the drop of a hat. It doesn't even have to be Powell. It can be just some governor who just happens to be in an interview and answer a sideways question. So I think that if you really want to be in the know, you should continue to track the 10-year Treasury, keep an eye on these jobs reports as they come out. And then most importantly, lean on the support that you have in your real estate agents and your loan officer because, we're getting rate updates hourly. And if the market really swings, that can be a day-to-day change, and that can mean hundreds of dollars on your mortgage. So the market is what it is, and to Sarah's point, some people are kind of getting used to where rates are. There are still people on the sidelines hoping for this gigantic rate drop, which I don't think will come to fruition in the near future. But yeah, I try not to get caught too in the weeds with the interview to interview situations.
Yeah, well, I agree there. I guess the question I got for both of you is, do you think this is a reaction to, like, we're just not seeing rates come down and people aren't really happy about it?
It absolutely could be. Everybody wants lower rates. I want lower rates, make my job a lot easier. But nobody likes a rate being high, especially when you have such recent comparison to where we were during the COVID days, which is just so low that we're never going to get back there. So, no one likes to hear that rates are high. No one likes to hear that rates aren't coming down. But we have to deal with what the market gives us. We have to deal with where we are, and people need to move. People need to buy houses. And from my perspective as a loan officer and the one lending these loans at these rates, it's just a matter of trying to get people to a comfortable place with their monthly payment and work with what we got.
How do you deal with this, Sarah? Because I think sometimes people, like, they want something and it's like the payments don't work and they get frustrated. And I mean, I think that, and this has always been the case, like, no matter what the rate environment is.
Yeah, I mean, I think one thing that doesn't make it easier, because obviously, like Kyle said, everyone wants lower rates. Like, that would be great. The fact that it's not being like, oh, we're expecting them to drop significantly in the next few weeks almost makes it easier, I think, to move forward with the situation that we're currently in. Because if there's always like a thought that, like, yeah, but in a week they're probably going to drop, or it makes it harder to kind of pull the trigger, even if the numbers can make sense for you where they currently are. But yeah, it can absolutely be. It can be very frustrating when you're running those cost sheets and then you have to put in that higher number. It's like, ooh. But I would say, like, 7 is, like, just as a ballpark number, like a place filler, when I'm just like roughly running sheets for people. I haven't put below a 7 in a while, because I also want to kind of aim over.
And that's not to say that people aren't getting sub 7% rates. I mean, there's many different ways that from the lending side we can manipulate the interest rate. We can look at alternative program options that may inherently have lower interest rates. But that 7%, that's kind of been the benchmark of where we are. And we'll see as this new administration really gets underway, and we'll see what they do with tariffs and immigration, and that'll have a lot of impact on inflation, which will have a lot of impact on rates. But I think right now we're almost kind of steady as she goes, more so than people thought so far in Q1. But we're going to play it as is. And I think the overarching point is that despite all of the information out there and all of the updates, overall, we don't expect huge swings in interest rates for the rest of 2025, maybe hovering in that 6 to 7% range or thereabouts. So, the idea that rates might drop next week, probably not true. The idea that they're gonna go skyrocket next week, probably not true. So all we can do is work with what we have and try to make people as comfortable as possible.
Well, and I think the good news here, and this is something that might cause the market to open up a little bit over time, I mean, maybe a year or two out, is we're seeing inventories north of 25% higher than where it was last year. And with higher rates, like these people are hesitating a little bit. There's still listings coming to the market. And if we can get back to those 2019 levels, I think that would do well for a lot of the folks that are out there. Do you guys see inventory growing, Sarah, specifically on your end? I mean, I feel like we've been on a lot of listing appointments. We're seeing those things happen. Like, what do you see on the inventory side? Because if you look at where inventory is now, again, it's up 25% nationally. What we're seeing locally is the number of active listings are up 11.5% compared to a year ago. So that trend's certainly been there. What are you seeing on the field with these maybe sellers that have been on the sidelines a little bit?
Yeah, I mean, I think they definitely are. They're coming out of the woodwork a little bit. There's also, like, from what I've seen when looking for buyers and kind of, monitoring what's coming up, there's like earlier in the month, there were a lot that were like coming soon to hit the market the 10th and the 17th. I felt like those were big weekends for properties hitting the market. I didn't see quite as many for like hitting this week, but there were some, and I have to circle back and look at them again, that kind of hit that second week in January, or like the first full week in January there for like the end of this month. So I think it's going to be interesting to see over the course of the next like 2 weeks for people who wanted to get it listed, here at the beginning of the year, but maybe had to like tie up a couple loose ends or finalize a couple things before they could actually hit the market. But yeah, I mean, I've noticed an increase.
Yeah, and if you look at and so you're seeing it, and I think that's good because it's really like there's always the question of what buyers are actually looking for, right?
Mm-hmm.
Like sometimes like, hey, there's new inventory, but it's not what people want,
right?
And that's always a big challenge. And if you look at just what's going on in our MLS, so they have a Market Watch tab that's there. So it's pretty cool because what they'll do is it gives you a quick glance at the market. So we saw 1,353 coming soon listings and 3,865 new active listings. So I anticipate there's going to be a pop in inventory here. I don't think it's going to be what people want, but 12, 13%. And some of these homes are, staying on the market longer if they're not priced correctly, which is causing supply to go up. So, we got this Fed meeting coming up here. I always like to go to the CME group and see what they're talking about. And we've got a meeting in 7-8 days here. And right now, the probability of a rate cut is 5.5%, 0.5%. So it looks like 99.5% chance rates stay where they are. Kyle, do you think a lot of that's the uncertainty about what's going to happen with the new administration? We're going to talk about that next because there was an executive order signed yesterday by President Trump about housing affordability, which I'm glad someone's actually talking about. And we can get into what that executive order is next. Do you see some hesitation as this kind of plays out with the new administration?
I do. I think it's a little bit of a pause. See how the administration's going to actually enact some of the things that they've talked about, while at the same time looking at what happened in Q3, Q4 when the Fed did lower their rate, and it didn't really make a whole lot of difference in the market. So I don't think they necessarily have an incentive to lower their rate right now, and I think it will depend a lot on how this administration comes in, what they put in place, and what kind of pressure Donald Trump actually puts on the Fed to continue to lower the rate.
It's interesting what the public thinks about all this because I've saw like these posts on social media. Like I thought we'd have $2 gas by now. It's one day in, and like all these like people are like, oh well, this should have happened already. So this is going to take some time. And Federal Reserve Chairman Powell, his term is up next year, even though Trump appointed him previously. So I think there's an opportunity to maybe reshape all this as well. I don't see rates going anywhere, Kyle. I mean, this is kind of what we're dealing with. I know we've talked about this a lot, but you're in this every day. So what's your observation?
No, same thing. We don't expect a whole lot of movement in 2025, which, to be honest, in our industry, consistency is nice. It's good. It allows people to get used to where things are. It allows them to kind of have an idea of where they're going to be once they actually go under contract on their home. Rather than, every other day we're running cost worksheets and that rate is jumping all around. But no, we don't expect a lot of movement. Obviously, we would prefer it to go down, but consistency is never a bad thing.
So, Sarah, what advice are you giving to consumers right now, whether it's a seller that's looking to buy, buyer, when they say, hey, I'm waiting for rates to come down?
Yeah, so I mean, I think I would, for buyers, ask like, what number are you waiting for, and how long are you willing to wait for that? Because depending on what the number is that they say, we might not even have a projected date in mind for when it could get there. So, and then for sellers, I think look at comps, look at competition, look at get down to motivation for what their reason for moving is. But I think as a seller, it's still, even though inventory has been coming up, it's still a good time. People aren't finding the right thing in every case. So still a good time to list. We would just want to kind of look at what to expect for the buyers that they're going to be able to bring in.
Well, and it also depends on the type of home they're listing, right? Like we've got some listings that have come to the market or are coming to the market that, you and I have been involved with, our team's been involved with, where like there's people coming out of the woodwork like, hey, get me in there. I want to find out early. I want to find out information. Then there's others that it takes more time. So I would argue like the like that move up home, I feel like that's the most sought after property right now. I don't think there's any question about it. I mean, is that what you're seeing? I mean, that seems what people want. Like they want to get somewhere for the long term, and it's also the homes people don't want to sell. So it's
Right.
but it's always been that way.
Yeah. No, there's some that, are going right away, multiple offers, and then others that may take a little bit longer for various reasons. But if your home is one that we think there's a chance it could take a little bit longer, now still is a good time to kind of get started. Because, let's go ahead, let's get it out, let's start getting some feedback in, let's kind of like accrue some of those days on market here early that we think it may realistically like have to be one. And, people are revving up for coming out for the traditional like spring market. So it's a good time to get out and get going.
Well, and it also takes a lot of time to prepare these homes too. I mean, just like the decluttering and, the cleaning, like not that these homes aren't clean, but like it's very unnaturally clean when you put your home on the market. So for the sellers that are, if you're one of those people that's talking about waiting, I mean, the data is very clear that inventory balloons in like March, April, May, June, and July, and then it kind of tapers off again. If you can get ahead of some of that demand, you're pre-approving people every day. They're looking for these types of properties, and they're kind of just waiting, and they're like on the sidelines. That's what the most savvy consumers are doing right now. So all the more reason to talk to someone like Kyle if you need to get your finances in order. Talk to someone like Sarah if you have a home you're looking for and you need a strategy in place, because if you wait till you see the home, it's usually too late.
Yep. I couldn't agree more. And I fully support what you said is potential sellers, get with a real estate agent, get your house ready. I deal with so many buyers that have a house to sell, and they'll kind of wait until they find the perfect house to even have the listing conversation. And by then it's too late. Like you said, it can take a lot of time to get a house ready to go. They also, a lot of times, don't really know what their house is actually worth or what it could realistically sell for in the market. So any potential sellers, whether it's buy, sell, or whatever you're doing, get with a real estate agent now in kind of the doldrums of winter here. Get a plan in place and start working towards it. That way, when the perfect house that you like pops up, you have all your ducks in a row and you can move on something quickly.
Well said. All right, so we're going to take a quick break. We are going to come back and talk about these executive orders that are the executive order singular that was signed by President Trump yesterday, as well as what to expect from this new administration when it comes to housing. And we'll break that all down next on Toole Time Real Estate Radio on WWDB 860 AM.
For the best local mortgage service and great rates on your money, look no further than Mortgage America. We've been operating in the greater Philadelphia area for 40 years with a focus on smooth, easy access to home purchasing. Whether you're a first-time buyer, upsizing or downsizing, or just refinancing, we have programs for you. We also have closing cost assistance programs and access to subsidized interest rates. Pre-approval is free, no costs or commitments. To learn more, visit our website at mymortgageamerica.com or give us a call at 610-439-8000. We always have a person available to take your call with around-the-clock human service. Purchase your home with the personalized, local service you find at Mortgage America.
Mortgage America is an equal housing lender. NMLS 128501.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit TomToole.com. Join our team, the Tom Toole Sales Group at RE/MAX Main Line.
I'm Tom Toole of the Tom Toole Sales Group at RE/MAX Main Line. If you're thinking of becoming a real estate agent in the greater Philly area, I have a special offer for you. Our team did $165 million of volume in 2021, making us the #1 RE/MAX team in Pennsylvania and a top 1% team nationally. Our agents love us because we offer them a successful career, a great life, and an unbeatable culture. Agents who've been with us for at least a year average 30-plus sales. Even our brand new agents average 17 to 24 sales a year. We offer proven systems and expert training. We help you set more appointments and sell more houses. Now here's the offer. If you don't have a real estate license yet, we offer real estate scholarships so you can get one for free. Check it out at realestatescholarshipprogram.com or visit the Tom Toole Sales Group at RE/MAX Main Line at tomtoole.com. That's tomtoole.com. Get more out of your real estate career, and remember the real estate golden rule. You always get more when you work with Tom Toole.
When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com.
Mortgage America's equal housing lender, NMLS 128501.
Welcome back to Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. We both work at the Tom Toole Sales Group at RE/MAX Mainline, the #1 RE/MAX team in Pennsylvania since 2018. And we've got Kyle Sutera here from Cross Country Mortgage, one of our preferred lending partners. We've done a lot of business with Kyle. He knows his stuff. Very grateful to have you on. If you get some value out of this, you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team, you can do that with the link in the comments. We are going to be talking about the executive order that was signed last night with the goal of defeating the cost of living crisis. So I'm going to read you the White House memo. We can get into all this, but I want to get your reaction first after the memo. I hereby order the heads of all executive departments and agencies to deliver emergency price relief consistent with applicable law to the American people and increase the prosperity of the American worker. This shall include pursuing appropriate actions to lower the cost of housing and expand housing supply, eliminate unnecessary administrative expenses, and rent-seeking practices that increase healthcare costs, eliminate counterproductive requirements that raise the costs of home appliances, create employment opportunities for American workers, including drawing discouraged workers into the labor force, and eliminate harmful, coercive climate policies that increase the cost of food and fuel. So that was the memo. And they talked about relief for housing in that. I mean, when you hear something like this, what's your reaction, you two? Sarah, let's hear from you first.
Trying to tackle a lot of things in that one memo, right?
What's the problem with these executive orders? It's like it sets the tone, then they got to deal with actually like getting all these things passed. But you're absolutely right. That's a lot.
I'm just trying to reread it right now because you're touching on that's a lot of items. I think it's stuff that sounds good, but I mean, there has to be how's he going to do it?
Mm-hmm.
And I'm just kind of going through here. So expanding housing supply to the order prioritizes increasing housing availability while reducing administrative expense. Oh my gosh, I can't say it either.
I feel better now.
So I guess what portion of the increased cost of housing comes from administrative expenses? Would reducing administrative oh my God, why is that so hard to say?
It's like a tongue twister.
Yeah, if that's how they're going to expand it by reducing those expenses, I'd be curious how much those expenses make up and how much that would kind of open things up for people.
Yeah, I don't know if there's any actual answers in this announcement. Going through there's a lot of ideas and honestly great ones. I would love if cost of housing came down and the supply expanded. That would be amazing.
Yeah.
How do we do it? I don't know. The only thing I really came across was the idea of reviewing building codes on manufactured housing to make that a cheaper option for developers and eventually buyers. Again, great idea. Depending what building codes we're reviewing and changing, that's a whole other story. Because we obviously want them cheaper. We don't want them any less safe than they're being built right now.
Sure.
So I don't know. There are a lot of smart people. I hope they can put their heads together and come up with an actual plan that makes sense. But right now, to me, it just seems a little bit. It's a lot of words.
You guys are both absolutely correct here. It's not just about homes. I mean, they're looking at bigger cost drivers like food, right? And that's been a pain point for a lot of people. The price of gas has gone down, so that's been a positive. Home appliances, it's expensive getting appliances right now. And it's not clear what the proposal is, but we'll have to see what the game plan actually is. I mean, there is a good point here they bring up is that according to the new administration, regulatory policies added almost $50,000 in costs per household. That's a lot of money.
It is, yeah.
That's a whole salary for some people.
Yeah.
And the first term for President Trump cut these costs by $11,000. So, I mean, if they're going to, who knows? I mean, it's a new administration. It's obviously a lot later. That's certainly good to see. That's the
if they can cut out some of that red tape,
for
all
sure.
it.
And then right now, like reducing regulatory burdens, like they currently account for 25% of the cost of constructing a new home. So, like there is some like permitting and going before the the township, and there is some stuff here that I would imagine is some nonsense on the local level. So if they can cut out some of that, that'd be great. We'll have to see how this unfolds. Now, what also came out of this is that there is this anti-regulation stance, and here's what's in the works: is the creation of the Department of Government Efficiency, led by Elon Musk, which will oversee top-down review of federal agencies to eliminate inefficiencies. So basically, like an inspection, which I think is, or like an audit. A freeze on regulations to prevent the creation of any new federal regulations, and that might be a hard reset for some of these housing-related policies. And he wants to overhaul HUD as well. If you look at the newly confirmed Secretary Scott Turner, he's going to focus on maximizing the department's budget and reversing what the administration calls corrosive progressive ideologies. And in the past, he oversaw a $50 billion budget in private investment. So, if they can eliminate a lot of that stuff, that just eliminates costs. I mean, that's I think that makes sense.
I think a thorough review of any industry, regularly, it's never a bad thing.
All the time, yeah, I agree
because
with you.
over time, processes get extended, the little fees get added in. Some things just don't make sense, especially with technology. A lot of industries fall a little bit behind, and there's extra fluff in there. So a full review and see where things can be trimmed back and how we can make things more affordable for the end consumer. I'm all for that.
So what about the CFPB, right? You probably know about this a little more than Sarah does. Are you familiar?
No.
So it's a Consumer Financial Protection Bureau, and it's basically like they regulate like RESPA, and there was a couple years ago there was talk about like mortgage companies and real estate companies that work together. They were like going to be like massively targeted. I don't know if you remember this. It was like 3-4 years. You probably do.
I do.
And so you have Elon Musk openly advocating for the bureau to be deleted, and if you look at the first term with Donald Trump, the CFPB director reduced regulations, which earned praise from the mortgage industry. Would you like to see? What do you think about that? I mean, I think there's so much red tape. You guys have way more red tape to go through than we do on the real estate side.
Yeah, and I mean, deservingly so. The CFPB, my understanding is they were created through the Dodd-Frank Act, which was the reform after the crash of 2008. So it was, and there's no secret that lending institutions were very much behind the issues that caused that. So there needed to be reform at that time, and there needed to be some strict regulations put in place. And that's why the CFPB exists. And, you could talk for days about whether it's overregulated, the decisions that they made and what they put in place, but it definitely made sense when they created it. And I don't think it should be deleted. I think our industry, just like any others, especially when we're lending to consumers, needs to be regulated, and there needs to be a little bit of policing going on. Again, do I think it needs a review? Absolutely. I don't think that would hurt at all. But the idea of deleting it is a little strong.
Well, I think the part of this is like politics, and then part of it's going to be actually governing, which is a much different thing. So, Sarah, with your exposure, like, what do you think about the CFPB? I mean, you're hearing what it is. Do you think it's it needs to be moderated a little bit? I mean, what's your take on these ideas that are coming out of this this new executive order and what the new president wants to do here?
I mean, I agree with Kyle here that like things should be reviewed, audited, looked into, but I don't think any like rash decisions of just like pulling out things that were put in place for a reason should be like hastily come to.
Yeah.
I think that, but absolutely like look in and see if things need to be tweaked, if there are things that don't need to be there anymore, or if there's additional loopholes that are costing money that people are having to jump through, and the benefit isn't worth the time and money to do it. But there certainly, I'm sure, are things in place there that absolutely serve a good purpose, and that should still be there.
Well, and I think we're seeing some of that with these new protocols we got to follow. I mean, there's like all this extra red tape. It takes time. And, the people that are going to win in the real estate community or financing, it's all the same. The people that know how to deal with this efficiently. And I think that's a good point. I do like the HFA appointee. So the Federal Housing Finance Agency, the nominee is Bill Pulte. You might know him from Pulte Builders. He was he's the grandson of William Pulte, the founder of the group. He's got a home building pedigree. And I like the idea of someone that actually understands construction, where we could use a lot of housing supply right now at a large level. Like I've done deals with Pulte. I think this could be something that might be able to streamline some of the housing finance policies that are in place. When you hear Bill Pulte being appointed here, what's your initial reaction?
I mean, he was feet on the street for many years, and I'm a big proponent of that. Anyone that's running an agency or running a company that's been there in the grind and understands how it works at the ground level, I like to think that they can bring a little bit of experience and understanding to the role. And maybe dumb it down a little bit and look at things as they actually make sense in that industry to the people who are working in it and helping the consumers. So I don't think it's a bad thing at all.
Yeah, I mean, I think that makes a lot of sense. Somebody who's actually done it knows what is like tedious, and where like things like you could use a little extra help, and being able to kind of bring that level of I did this job to it.
You know what I like? This guy's not a politician getting recycled and getting some job that was promised to him. I mean, I think that's exciting to me from being in the industry. How many times have you seen like somebody who doesn't know anything about real estate come in and like cause a problem in a transaction? Hundreds of times, like a year.
Times.
Like, I mean, so I like that it's not a politician. I think that's a really good thing there. The last thing to talk about here are these tariffs, right? So this has been kind of a wild card for the housing market. So there's some trade policies that are being talked about, and with plans to enact 25% tariffs on Canadian and Mexican goods starting February 1st, and it could affect building materials. Specifically, Canadian softwood lumber has been hit hard by tariffs with 2018 duties, which were the basically another word for taxes, added $9,000 to the cost of building a single family home. Energy costs, because broader tariffs could on imports could increase the cost of fuel, impacting transportation and construction expense. Logan Mohtashami, who I've had the chance to talk to on Knowledge Brokers, he mentioned that the tariffs are tactical with an eye on achieving trade leverage rather than sparking a full-scale trade war. Are you worried about these tariffs here?
The building cost one worries me a little bit, especially on wood. And, I don't think it's necessarily going to stop homes from being built, maybe slow it down a little bit. But one concern I do have is if all of the building materials are costing more, what's that doing to the price of those homes that are getting built? And are we building more starter homes? Are we building, more affordable homes, or are builders now going to veer more towards, the $1 million house to get as much return on those builds as they can? We need inventory. That's everyone knows that. And the idea that building costs could go up, it's a little bit scary. It works against what we want. And from a market perspective, I think that's been a big hesitation on rates as well. Just not knowing what the future holds as far as what builders are going to be able to do.
Right. And I mean, if it says here that the increasing those tariffs, if that offsets the savings for the reduced regulatory costs, then you're essentially at the same number, but without as much regulation, which might not be like, I'm all about like looking through and finding out if there are regulatory steps in there that are not necessary. But if, depending on how they go about it, if they're reducing regulations, and again, I don't think that they would hopefully do anything that would be like unsafe or hopefully not something that would like backfire. But if you've got that going down, so if you're still saying like paying the same price, I don't know. It's just like take the win and at least let it like ride for a little bit. Like, you know what I mean? Before why jump right into the tariffs? But
I'm hopeful Logan's right on his observation here, because and then it's like 6 of one, half dozen of the other. It's a net zero, which doesn't really help a lot of people. So, what I want to leave you guys with here before we break and talk about Cross Country Mortgage and the product showcase that Kyle's going to give us here in the third segment. What do you? I'm looking at all this here. I don't think anybody knows how this is going to play out, right? We're in a world of unintended consequences where like things happen. Like we talk about new construction. New construction is not going to help us here because in the suburban markets, there's not much new construction as it is. It's already very pricey to buy a new home. And the advice I have for consumers and for agents is that you really got to pay attention to what's going on. And whether it's like rising costs, labor shortages, tariffs, less regulation, you're going to have to pivot a little bit in how you run your business. And I would just look at the things that, all right, how can I help people here in a way that's going to be scalable? Because this is going to be a little unpredictable, and you're going to need to pay attention to what's actually going on. I think that's the best advice I have for anybody here.
Yeah.
All right, we're going to take a quick break, and we are going to be talking about Kyle Sutera and his new company, Cross Country Mortgage. Very exciting. I know we're excited to work with him about it. We'll break it down next on Toole Time Real Estate Radio on WWDB AM.
You shouldn't have to deal with all the red tape when getting your mortgage from a big or online bank. At Mortgage America, we have access to big bank money, but with the personalized and detailed service of a local bank. We are here in your community and ready to serve with fast settlements, low down payment options, and first-time homebuyer programs. Pre-approval is free, no costs or commitments. For more information, visit our website at mymortgageamerica.com or give us a call at 610-439-8000.
Mortgage America's equal housing lender. NMLS 128501. When you're getting a mortgage, you shouldn't have to sacrifice great service just to get a great rate. At Mortgage America, we've been lending with this philosophy for over 35 years. We have access to great low rates without the complications and delays of big or online banks. We're a local Pennsylvania lender with loan officers that you can actually meet. As PHFA's #1 lender, we specialize in all residential mortgage programs, including first-time buyer programs and low down payment options. For your free pre-approval, call us at 610-439-8000 or apply online at mymortgageamerica.com. Mortgage America's equal housing lender. NMLS 128501.
The Tom Toole Sales Group is the #1 RE/MAX team in Pennsylvania with over $165 million in volume for 2021. I'm Tom Toole, and our team has achieved that kind of success by being a great place to work with and to work for. No one knows Greater Philly better than we do. We know real estate, but more importantly, we're real people. We hire the best agents, and we give them all the tools to succeed. Even our brand new agents sell 17 to 24 homes a year because our team delivers the best experience in real estate. Teams deliver a better experience than individuals, and we're a top 1% real estate team in the country. We call it AAA service. We're your advocate, ally, and advisor. Because this isn't a transaction to us. It's a relationship. If you're buying or selling a home, call the Tom Toole Sales Group at RE/MAX main line at 610-692-6976 or visit tomtoole.com. That's tomtoole.com. Sell your home for more, and remember the real estate golden rule. You always get more when you work with Tom Toole.
Have you considered a career in real estate? Do you want control over your income? Whether you have a license or not, call us today at 610-692-6976 or visit tomtoole.com. Join our team, the Tom Toole Sales Group at RE/MAX main line.
All right. Welcome back to Toole Time Real Estate Radio on WWDB 860 AM. I'm Tom Toole. She's Sarah Tymon. We both work at the Tom Toole Sales Group at RE/MAX Mainline, the #1 RE/MAX team in Pennsylvania since 2018. And we have the pleasure of having Kyle Sutera on. You might be our most frequent guest, by the way. I was looking through the notes.
Happy to be here.
Well, we're happy to have you. And Kyle has recently gone to Cross Country Mortgage. We want to talk about the products that you have to offer there, because in today's environment, we're talking about how bumpy of a road the economy is going to be. You got to have a whole list of ways to help people, and folks like options. So if you get some value out of this with Kyle, you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team and Sarah specifically, and if you want even Kyle to help you out a little bit, you can do that with the link in the comments. So what's the best way for people to reach out to you, Kyle? I would not be giving your cell phone out on the radio. Like,
I'll get my email out. Email me.
email's fine.
Kyle.sutera@ccm.com.
All right, so Kyle.Sutera@ccm.com. So tell us a little bit about the reason behind the move here. I mean, I know you're focused on helping people, which is really important. So break it all down for us.
Yeah, absolutely. So me and my team, I work with Kevin and DJ, both same last name. We were at a smaller bank for a very, very long time. And they were great to us. We helped a lot of people with the partnership with your team and otherwise. But we started to notice that, with a smaller lender, you're limited on options. So the offerings that we had for our clients, we captured a really good segment, but we were missing out on a lot of other segments. And we were saying no to a lot of people who, otherwise had no reason to get turned down for a mortgage loan. And it wasn't anyone's fault. We just didn't have the breadth of portfolio that we needed to offer those people. And so, we started looking around a year or so ago, and we vetted a lot of lenders. And I'll be the first person to tell you, it's hard to find a really good mortgage lender that clicks all boxes. You have your local banks that are great at what they do in that area, but have a much more limited portfolio and maybe can't help everyone. You have, the giant monstrosities like a online bank, like a Rocket Mortgage, who I'll throw them right under the bus, who, have it all, but don't quite know the ins and outs of local markets. Sometimes don't even know how to do their basic job. Sorry, Rocket, but take it. But so we really wanted to find a complementary lender, someone that has the critical mass and the size to offer all of the products that we need to help as many people as we can, while still giving us the freedom and flexibility to work locally and offer all the benefits of the smaller lender. So we found that, Cross Country is a big national lender. They were number 3 residential lender in volume in 2024, number 1 in Pennsylvania. But the way that we operate is at a very regional and local level. Our entire team is local, staff, underwriters, appraisers, loan officers. So we're here. We have all of the local products as well as the national ones. But what it gave us is the ability to help people that aren't necessarily inside the box, and not many people.
So what does inside the box mean? Because I think this is where a lot of folks don't understand what mortgage companies do and don't do.
Yeah. I mean, we talked about the regulation from the CFPB earlier, right? So after the whole reform in 2008, there was more so than ever boxes created of what people can and can't get approved for, and there's governing bodies and GSEs, government-sponsored entities like Fannie Mae and Freddie Mac and FHA, and all typical loans adhere to their guidelines. Okay. And a lot of people will fit into those boxes, but there's a large segment that won't. People that may have a credit score that's 1 point under the minimum, or particularly self-employed buyers who they haven't owned their business for long enough for a certain period of time, or the way that they file their taxes is different than what the guidelines require. People who may be on an alternative type of visa in the United States that Fannie Mae or Freddie Mac won't allow. So it's a very, very large segment of people, and it's a growing segment that really needs some alternative options. Investors as well, being able to start an investment portfolio without all the bells and whistles that the governing bodies want you to have. So we wanted to go out and get those programs and be able to help people. Some of the things that we added to our portfolio are investor specific, like cash flow loans, or DSCR loans they're called, where the qualification is based mostly on the income that the house could produce versus that buyer's income in particular. The loans make sense. If that property can generate enough money to support the mortgage, that loan makes sense. And it's not necessarily a predatory loan. It's what's now called a non-QM loan. And I think that a lot of people see these out-of-the-box programs such as non-QM. They kind of relate them to the old subprime loans from back in the day. And I can argue vehemently against that. Subprime loans, it's in their name. They were subprime. Non-QM loans still have pretty strict qualifying parameters. They just don't work within the same confines, right? They have a structure in place, but it's not the cookie cutter structure. Bank statement loans or 1099 loans, being able to look at the amount of money that someone has in their bank account as collateral versus the type of income or employment that they have or the timeline that they've had their income. That's a really helpful one, especially for, high asset individuals, high net worth individuals who maybe someone's retired. They don't have income because they don't need it. They have a lot of money in the bank. Why shouldn't that be a person be able to get a loan? And that's a product that we brought on as well, an asset qualifier loan. ITIN numbers instead of socials. Those people.
So what's an ITIN number for the people that don't know?
So that's a tax identification number. The individuals that may not have a social security number, but may have been operating and running a business or working in the United States for many years. That one, the popularity on that one could go either way. Let's not get into that. But, there are options for people like that. And then, the big one right now is construction and renovation, right? Because some of these homes that are popping up and sitting, aren't necessarily either move-in ready or they're just not as pretty as someone wants it to be. Our portfolio now of construction and renovation is vast. And so we can help people that want to buy and fix up a house or want to buy a lot and build on it. And that's gonna really help use what inventory we have to hopefully open up other inventory where we can lend the more cookie cutter products on. And then the ability to source funds from within a house that you already own. This is huge because a lot of people don't want to move because all their money is tied up in their house, and then they have to deal with a home sale contingency, and it just starts this whole snowball effect of everyone staying put. So we brought on a portfolio with bridge loans, a temporary Band-Aid to help people pull money out, home equity lines and loans. We have dozens of those that can give people access to money in a property they already have to do whatever they want with. And then also more assistance loans for the first-time buyers who can't quite scrape together enough to come up with the down payment and especially the closing costs, which can add up. So just bringing on many more of them. We've opened ourselves up to just more segments of people that should be able to buy a home and should be able to get financing on that home, but don't necessarily fit the box.
That's a lot of products.
So that's a fraction of them, but yes.
Well, so how do you, for the consumers that are listening, or even for the agents, how do you guide people through what's going to be best for them? Like, because I think a lot of people they're hesitant to call a lender because they feel like they're getting locked in, they're getting pre-approved. It's one of the biggest hurdles in the transaction where you got to get them from like talking to you to actually like talking to a lender. Mm-hmm. So what advice do you give to folks? I mean, how do you present all this? 'Cause that's a lot to digest for anybody, let alone someone like myself or Sarah who's in the industry. So what's your process look like?
I try to urge people to just talk to someone. If you go on the internet and you look up loans, you're going to get that whole 5-minute rundown of what I just gave you. And 99% of that is not going to make sense for most people. So having a conversation with someone that's experienced in it is going to help them sift through all the options that are out there and hone in on the ones that make sense to you and for your situation. So I try to start everything with a conversation. If I can get someone on the phone, not just to pre-approve them or ask them for their social security number, but to get a feel for what they're doing and what they're thinking. What are you thinking? Are you looking to buy a house? Are you looking to maybe buy a fixer-upper? What's your situation? Do you have a job? Do you own a business? And just kind of get into the weeds on their situation. And as I'm having that conversation, I'm mentally keying in or out of different products that can apply to them. And once we have everything set and we know what we're looking for, or we know what we're looking at from a financing side, we can present those options back to them. And that conversation and that initial pre-approval will help make the entire process so much more tangible for any buyer. Even if they're thinking 2 years down the road and they're just they want to get an understanding of what could be available to them, that initial conversation will help head over heels. And it also helps make sure that they don't spend the next 3 years casually browsing Zillow in the wrong price range, right? Or looking at houses that are not attainable or are below what they could actually get approved for and what they could do. So my biggest takeaway from this would be if you're thinking about a home purchase at all, Don't, stress yourself out by trying to do your own internet research. Connect with a lender, connect with a couple lenders, and just have the conversation and let them do some of that legwork for you. That is why we get paid.
Right. And I think it makes it's so great to get in touch with a lender and have good conversations if you are 2-3 years out. Because what if something comes up that in your credit or that you could use those 3 years to take care of at not an urgent, pulling your hair out type of way, so that whenever the right time comes, you are ready. And what I always let my clients know is that having a conversation with a lender does not mean that you are locked into them.
Mm-hmm.
It does not mean that they are going to force you to do anything. If they are being too pushy, find a different one.
Yep.
And if you try to do your own research, that's where you may end up accidentally putting your phone number in and getting 50 calls from random lenders. Have a good conversation with one or two.
Yep.
Well, and Sarah, you hit the nail on the head. I mean, there's stuff you don't even know about. Something funny on your credit report. Maybe you need an extra couple months of income reporting. We're both 1099, right? We go through that all the time. So great reason to talk to Kyle. Kyle, what's your email again? How can people get in touch with you?
It's kyle.sutera@ccm.com.
So that's where you can get Kyle. You can follow Sarah. She's at Ty_Ty_Time on Instagram. You can follow me at Tom Toole 3RD. And we are back live every week, Tuesdays, 3 o'clock here on WWDB 860 AM. That's it for this week's episode of Toole Time Real Estate Radio.